We're starting to see some cracks in the consumer emerge here. It's Thursday, May the 15th, and this is Markets with Megan. If you like this podcast, please subscribe, hit that alarm bell. You can share with friends, family, or colleagues. But we wanted to detail the report that we got this morning on retail sales for the month of April. And this is important because it's the first reading that we've got on the consumer for the second quarter GDP. And remember, the consumer is the majority of GDP. Now, look, when you look at the report, it wasn't awful. Some of these indicators came in a little bit better than expected. At the headline level, it came in at a 1/10 growth rate for the month versus the expectation of it being flat. When you look at X autos, that came in a bit weaker. The survey was expecting 0.3%, and it came in at 0.1%. But the one indicator that we focus on is that control group. That's going to exclude all of the volatile items like food, energy, gas, building materials. And this has a direct impact input into GDP figures. That actually declined for the month of April. The expectation was that it would rise 0.3, but it actually saw a decline, and that's the fourth decline we've seen out of the past 7 months. Now let's dig into some of the details that we got from the report and where we're seeing this weakness. The areas that we saw the biggest weakness were in some discretionary items, not all discretionary, but if you look at motor vehicles, they declined. If you look at clothing, that declined. Sporting goods, that declined. General merchandise, miscellaneous, health and personal care, gasoline, that's a good thing because the gasoline prices were lower. All of these drag that index lower. If you look at a couple other true discretionary items, though, you can see furniture, electronics, building materials. All of these rose. Now, we can't decipher yet if this is just consumers trying to get ahead of tariffs, because obviously some of these are tariff impacted, but they did see modest increases. And when you look at eating and drinking, this is a real big discretionary indicator. Are people still going out to restaurants? And while it did weaken a bit from the big 3% jump we saw last month, it is still rising. It's about 1.2%. So there is some cracks emerging from the consumer standpoint, but not falling off a cliff. This will be important for the second quarter GDP. Now, markets are starting to price back in the expectation of some Fed rate cuts, and that's because we are seeing some of this data soften, especially in the housing market. But there's a lot more information for the Fed to digest before we can decide if the June meeting is on the table. That's all we have today. If you want a history of our podcast, you can go to marketswithmegan.fm. Thank you.